So this is the RSI breakdown video. This is probably my favorite technical, very simple to use. It's important to realize that this is just another technical for your toolbox. So like everything else, do not just rely on this. Okay, very useful, very good, but as I'm going to explain later in the video, it's just one part of your toolbox. So here is an example from Boeing. Now, most of the time when we talk about the relative strength indicator, we're going to use period 14. So it's an average based upon the current trading day and the last 13 trading days. So it's going to oscillate between 0 to 100%. For the very dummy version here, usually, and I'm really going to hit on this, usually oversold is a good time to buy. And likewise, usually overbought, good time to sell. But there's some times where it's not that simple. So how is the RSI derived? Now, mathematically, we start with what's called relative strength, which is the average gain over the average loss. RSI does not need to actually use 14-day periods, but usually does. So in the event that you have the 14-day period, average gain is going to be the percent sum of all of the gains in those 14 days divided by 14. Likewise, the initial average loss is a summation of all those losses percent-wise divided by 15. Very simple math. The average gain was 5% for a 14-day period, but the average loss was 1% for a 14-day period. The relative strength itself equals 5. Very simple. Now, relative strength index, okay? So the RSI itself is 100 minus 100 divided by 1 plus RS to start out with. So easy math, 100 minus 100 over 1 plus 5 equals 83.3, which would be an overbought RSI. Now, after you have your initial period, you can do a average gain or average loss formula, which in the case of average gain, the previous average gain times 13, which is accounting for the last 13 days, plus the current day's gain divided by 14. And likewise, the opposite for average loss. RSI could be 14 days, 20 days, 30 days, whatever. So the denominator will change depending on your period. Likewise, so with the first part of that equation. It'll be the last X number of days for that period. Now, with RSI, very simple. If you went to a RSI of 100, that means that every single day in your reporting period, stock went up. Likewise, RSI of 0, every day in our reporting period, stock went down. Okay? And likewise, usually it's done over 14 days. I would generally like to prefer somebody using RSI between 14 to 20. As you narrow the period, it's going to be more volatile, easier for trading. If the period is too large, the overall chart's going to normalize a bit. So to explain that, here's Boeing again with RSI of 14, 20, and 30. As you can see, as we increase our reporting period, the actual RSI kind of shrinks a bit, and there's not nearly as much fluctuation. If you're a trader who's potentially trading every other day or so, even every day, you want these small variations. Because as we go overboard, like 30, 35, whatever, this isn't quite as useful. That being said, you can still get a feel for, okay, overbought, overbought, overbought. However, it's unlikely for the large periods to actually touch the overbought or oversold range. That's why for me, I just usually just stick to 14 days. Okay. Once again, overbought, RSI of 70 or more, oversold, RSI of 30 or less. It's a very simple technical. Okay, so two examples here where we have the oversold condition. You have Occidental Petroleum and you have Celsius Holdings. So if you look at the chart, you can kind of tell, okay, well, last couple of days, both of these individual stocks have almost only went down, and they went down a fair bit. So now they're both in the oversold category. Oxy, for example, I've actually been slowly buying now. And the RSI is going to work best with cyclical stocks. So if you kind of track Oxy over this 1 year period, see where it touches or gets close to overbought, use the peak of the chart. Likewise, when it's close to oversold, use your bottom. RSI is a very strong indicator for cyclical stocks. Now, where RSI is going to struggle is stock like Meta. Now, RSI, because all it's using is the actual percent increases for that 14-day period or percent decreases, it can't tell you the actual long-term projection, especially if you have a stock that's way overvalued or way undervalued. So that's a Meta's actually been undervalued for a while. So if you would have sold Meta at the instant it was overbought the first time, way back in November of last year, you would have missed a lot of gains because it's been a monster and it's actually got a pretty low P ratio. Even right now, the price to earnings for Meta is only like 25, which is pretty wild. So that's the thing. You have to not disregard fundamental analysis. So RSI is nice, but RSI is a tool for your toolbox. It should not be used by itself in a vacuum. You still need to know the actual valuation of a stock relative to its peers and act accordingly. Not just use RSI, especially for a stock like Meta, because you could have lost quite a bit of gain. That's also why stocks like Meta and Microsoft are often known as buy the stock, don't trade the stock type stocks, where they're oftentimes best to buy and hold. But even Meta, I prefer trading Meta a little bit, where I will wait for a bit of a pushback on the overbought, buy, and just wait again. Meta is very simple, but you don't want to overtrade it. So when it comes to Tesla's a good example of truly overbought. It's actually a pretty cyclical stock last couple years. You can kind of look at the actual RSI versus the chart. Usually when it's super oversold, great time to buy. But when Tesla is very overbought, good time to sell. So I don't really see Tesla breaking much more from its current price. So if I was a Tesla shareholder, I would sell and then get back into it. Tesla's a stock I do trade, but usually when I trade Tesla, I really wait for these juicy entry points because it's very cyclical, it tends to crash a lot, and the overall market itself is red hot. So that's all for RSI. I want to keep the video pretty short. It's a very simple metric, but remember, it's still one tool for your toolbox, not to be used by itself.